I'm Simon Guzowski, Senior Portfolio Manager for Beresfords Asset Management. Glad you could join us again. This week we have another stock story for you. The company is Queensland Rail, QR National. I'll tell you a bit more about it, some of the things they can do to grow, and some of the key risks they face. Now, you also don't need me to tell you they're a rail business in Queensland. They're also growing into Western Australia and New South Wales now. Some of the key things they can do to get that business moving forward is really growth in coal volumes. This is the bread and butter of their business. If you look at this chart here, you see coal volumes from 1990 have been steadily rising year after year after year in a wide variety of economic circumstances. Now this is the sort of business we really like to invest into. What else can they do? Iron ore is a clear growth market for them. In this slide, in the bottom left, you can see iron ore volumes have just started and they've got good growth prospects moving forward. What they're really doing is finding those mid-tier players in the iron ore market can't afford to build their own rail, but do need a solution, and they're connecting them together. Other growth factors for them is actually price. They can lift their prices. They've had 145 years of government ownership. I guess you'd almost describe some of their contracts as charity contracts, really unprofitable. Now, as a listed commercial business, they're putting these prices on commercial, profitable terms. Finally, there's cost cutting, and the good news is, yes, there'll be redundancies, but that's not what it's all about. They're also maintaining their fleet better, more cost effectively, and extending the life of all of their equipment. So it's going to save them a lot of money over time. What are the risks? Every business has some risk. We need to be aware. For these guys, there is the carbon tax. So they've got a big iron ore and coal exposure. Carbon taxes can impact these sectors. And we are seeing a shift towards more use of gas for energy generation. So that is a risk for these guys, but we say coal is probably going to stay a big part of the energy mix for some time. Also, the government owns 34% of this business still, and we know they want to sell. So eventually, that'll be offloaded, and it could cause a short-term price impact. But overall, we think this is a great business. We really look forward to seeing what they can do to grow over the next few years as they grow that business and reduce their cost base. That's all we have time for this week. Thank you for joining us. See you again soon.